Okay, it says we are live. So we'll give it a second for everybody to jump on real quick.
Okay.
Let me make sure. Okay, guys. So here we are. Um, Chad here with Limitless Realty Group, and I have on the other side Esmeralda, or I think you can go by Essie. Is that right?
Yeah, you call me Essie for
Okay,
short.
great. So what we want to talk about today is I wanted to bring some more value to you guys. Last time we did this, I had San Antonio Author of the Year, Luis Cervezos. Go back and watch that video if you have not had a chance to. Today I want to talk about something I've had a problem with in the past is my own credit, and I finally got it squared away, but it's definitely an issue that a lot of people can deal with today, especially with everything that we're going through and how to think about some of the steps that you may have to take to get your credit back in the right direction. And so this is to provide some information for you. And thank you, Essie, for jumping on with
Yeah,
me.
absolutely.
And I did want to ask because I was just kind of curious myself, and I was wondering what brought you to Mr. Credit Solutions. What's kind of the backdrop with what your passion is there?
Yeah, I love to tell people that story because I had been in government contracting for a really long time. And I just kind of always had an itch to do something a little different. A good friend of mine is the owner of Mr. Credit Solutions in Lubbock, and he's thrown the idea around a couple of times. And I finally kind of said, I'm ready if I can do this because I had to apply for my own home. And my credit scores went off there. So, needless to
Wow.
say,
So
I had to deal with the whole credit repair thing and say, let me figure out how this works. And so I started as a consumer and a customer and a client. So it was easier for me to immediately say, I don't think everybody knows that you don't have to pay your collections. You might be able to dispute them, and then you can consider debt settlement. So, I just didn't realize there was so much that I didn't know. And I just started doing research in San Antonio and realized that a lot of people need some credit assistance, credit repair, or maybe credit card, how to use your credit card direction. So I felt like this is probably where I belonged, and then I decided to start Mr. Credit Solutions here in San Antonio.
that's awesome. So, and you have your own team around you as well, right? Is there other
I have a
individuals?
dispute team and an admin team. We don't have that here in San Antonio, but my
Mhm.
Lubbock office is the home office, and that is where the dispute team has been now for 10 years. They've been going strong out there. We help all over Texas, so it's not just to Lubbock and San Antonio. We help clients in Houston, Midland. We have a lot of clients in Midland and Odessa, a lot of clients in Dallas. Um, so we have clients all over Texas.
And that was another thing I wanted to bring up too, was because since this is something that applies to pretty much anybody in the nation, like I have friends in Washington, D.C., West Virginia, Florida, so it's all applicable to what you've been doing. And how many years have you been doing this, by the way?
I've only been doing this for a couple of years now. The
But
dispute team and Mr. Credit Solutions in Lubbock has been in business now for 10 years.
but you've helped a lot of people. I mean, so
Oh yeah, in 2 year period, I mean, it's a lot more. It's I didn't expect for it to move this quick and me be able to get a grasp this soon,
mhm.
of especially the San Antonio market. But I work with amazing lenders, amazing agents, and it's just it's educating my clients is the number one goal. Even if they don't become a client, I love being able to at least have a consultation and really getting them to understand so much about their credit report that they did not know before.
Hmm. Yeah, I think that's one of the most important factors. Like, you can't. It's what I say is, cash is king and credit is power. That's something that I've kind of lived by, and it helps because I think, okay, well, if I have capital to do something, that's different than saying that I have, the credit to leverage, in order to purchase a home or an automobile or anything that you're trying to, go through in life because they make it such a factor now, especially more than ever in our lifetime.
Absolutely.
So, and so I've seen people though, and I'm sure you can speak to that, have come from 400s all the way up to 700s.
Oh,
If, if they
yeah, that's a
follow.
weekly thing that we get to see. And
Wow.
credit repair is not only for the 400s and the 500s. A credit repair is for 600s, clients that are in the 700s.
Hmm.
Because collection don't care what your credit score
Mm.
is, So collection, if you've got dead weight on your collection, I mean, on your credit report, because of collection, you can qualify. And the good thing about our team is we'll offer a quick 15-minute evaluation, just kind of look at your credit report, get an idea of, do you need credit repair, or maybe you just need, a quick
Hmm.
um, talk about direction and how to use your credit card, etc. So, I mean, some people are looking just to buy homes. Financing vehicles or refinancing vehicles is huge because a lot of people are paying way too much in interest on their autos, way too much.
Mm. And that's so I forgot about that. So credit is being used on insurance a lot now too, right? To figure
Yeah,
out.
insurance and business. I mean, if you're trying to apply for a certain position somewhere,
Hmm.
your credit has to pass. I've worked with a couple of guys that are even in military, and I don't know exactly what the rank is, but we've had to send information of the contract to them to show them that they're working on their credit.
Hmm.
So we've had to do that even with different companies to show that they are trying to improve their credit scores. They're disputing items. So yeah, I mean, it's not just buying a home, it's not just getting the car. There's so many other reasons. Insurance rates. I mean, I even found out that when you upgrade your cell phone, they do it based off of your credit score now too. Like if you don't have a good credit score, they won't upgrade your cell phone, or you may have to pay more. So I didn't even realize that until a few weeks ago.
Wow. Yeah, and it's gonna get more strict, I think, too. But I don't know. I've
Yes.
heard I've heard mixed things. Some of my friends who are lenders, which I can't speak to exactly because I'm not a lender. I'm only a realtor, but I know that things are going to start changing more. So it's good to be educated. And one of the things that I do personally is I signed up for. Where can we get free? Is there like freeannualcreditreport.com or something like for?
Yes, you can. You sure can. You can go to freeannualcreditreport.com and get your free report once a year. There are different monitoring sites that I would probably recommend.
Hmm.
So if anybody's interested, and I can kind of go over why I would recommend. It kind of depends on their situation.
Hmm.
I never want to put any of the other monitoring sites in a negative light, but not all of them are 100% accurate. And so sometimes I was one of those that went to one of the ones that were online. And so when I
Mm.
thought my score was one thing, I was sadly mistaken when I was trying to apply for my home.
Wow.
I got a quick dose of reality why those monitoring sites will never be what a lender criteria is.
Mm. Yeah, that's valid. And there's so many different
Yeah.
ones. There's TransUnion, Equifax. What's the other one? Um,
Experian,
Experian.
and then
Yeah.
there's Innovis. And there's a couple of others. Innovis hasn't come out too much in the light just yet, but they probably will.
I
And there's
haven't heard.
actually another one too. So really, there's not just three credit repair. I mean, three uh, agents. I mean, three bureaus. There's more than three, but the main reporting ones right now are TransUnion, Equifax, and Experian.
Wow. Okay. Well, that's good to know. I didn't know about the other ones either. So,
Yeah.
but well, one of the things I think that would help with is we can jump into the slides if you want. I think you shared
Okay.
some
Yeah.
information.
Absolutely.
And by the way, everybody, so Essie here, she does webinars for people. If you have any reason that you need to, if you're interested in getting a consultation or want to speak to her about increasing your credit, this is definitely the person to talk to. She's been doing it for quite a few people, and so she's seen every scenario. But anyway, I want to jump in. I think I shared my screen earlier, so people were probably looking at that. But
Yeah.
let me look at this and tell me if you can see. I
I can
believe.
see it. Yeah.
And so what I'll have to do is let me see. I guess we'll be kind of looking at this, but let me share. Let me stop actually sharing, and then let me share this screen. Let me do it this way. Bear with me. Um,
And I do have another webinar coming up this weekend. I did
Okay.
one last weekend, just like what you were addressing, Chad, the changes that are happening,
Mm-hmm.
the changes that are in effect right now. Scores, the minimum credit risk score that's required now is a little higher and different for different lenders. So I just kind of touched on why that happens. I had a lot of clients reaching out to me and saying, Essie, I'm hearing this, I don't understand it. Even had some agents reach out to me and ask the same question. So I'm doing another one this weekend. So if anybody is interested, you can go to San Antonio Credit Help, and I will be posting that webinar, all the info on that webinar this evening.
Okay, awesome. I like it. So we'll share that with the video after I'm done. I'll post the link,
Okay.
and also I'll post links to get your free credit reports as well, as you mentioned. And then also, so can you see the screen again?
I can.
Okay.
Yeah.
So cool. So what we have here is this is a slide that you share with your potential clients that are interested in getting on the right track for increasing their credit score. So I kind of wanted to go through this with you as if I might be a client. And so we kind of jump in through the 5 different components of a credit score. Um, what is that compiled of?
Right. So if you go to the next slide, actually, we'll start there. The 5 components of a credit score, you can see them all here: payment history, debt ratio, length of credit history, inquiries, and types of credit. So we just discussed payment history because, as you can see, it's the largest chunk, 35% of your score. And this includes not just late payments, but this also includes collections and any derogatory item. So this is typically where most people are coming to us for help, is in the payment history section. But if you don't deal with your collection items, they're not going to just go away. And like I mentioned earlier, paying them doesn't necessarily mean they're going to be deleted from your credit report. So we just like to try to have that conversation to see, kind of what collection items do you have? How old are they? Are they still affecting your score? A big misconception, I was telling Chad, telling you, Chad, the other day, that big misconception is when people say, one late payment isn't going to really hurt me, so that's not a big deal, but that's not true.
Mm-mm.
One late payment can actually hurt your credit score up to 100 points on average.
And how long does it stay on? Isn't it stay on there a long time, right? If you miss a
Yeah, so
payment.
if you have a collection item, it can be with 7 years with one credit share, but that doesn't mean another one won't pick it up and purchase it off that one before it hits that 7-year span. So like typically in the 6th year, you're going to see that get sold out to another collection, junk debt buyer, or a third-party collection agency. So I always tell everyone, don't think it's just going to go away. Like if you have the ability to deal with it, don't be nervous about dealing with your credit score. I've had so many clients tell me, I'm embarrassed. I don't want to deal with it. I don't want to talk about it. Like it's gotten so bad.
Mm-hmm.
Like the only way to make it better is to start, kind of facing what you've got to deal with. And I know firsthand. I felt that way too for a long time. Then I really regretted not starting sooner when I should have.
So what's a myth that regarding the 35% payment history, or what's a myth regarding that you can share?
Well, that's one. That you're not going to have if you have one late payment, it's not going to hurt you that bad. We've seen one late payment hurt people severely.
Mm-hmm.
Also that, charge-offs, repossessions, collections will fall off after 7 years. I hear that all the time. But it's not necessarily going to fall off. It can be bought by another creditor. So that's why I say they're just not going to disappear. It's just better just to deal with them as soon as you can, so that it doesn't continue to affect your score, and you keep putting it off and putting it off when you can handle it sooner than later and not have to worry so much about these collection items anymore. And especially now that so many collection items are turning into judgments and people are actually having to go to court to deal with them.
Interesting. So what about isn't there a certain threshold that you should have on your credit score? So for example, I remember I paid down all my debt until like I hit 20%, because I know if I go too far under the credit limit of what I'm allowed, I don't know how to, you know what I'm trying to
And
ask?
that's the next line. That's debt ratio. If you go to the next one, Chad.
Okay.
Debt ratio, that's another misconception. So misconception that I hear is, that you need to have a 30% utilization. And so I always put it this way to my clients. If you and I both have a $5,000 credit limit, right? You have 5,000, I have 5,000. but you keep carrying over 20% of the balance every single month. Then we get scored by the bureaus. Who's going to get the higher score? I am. I have no debt. I'm not using my credit card. You're just paying interest every month. So, I think, I always say to my clients jokingly, I think whoever made up that 30% utilization is probably the bank.
Wow.
Because then they get interest, but no, a bureau's not going to say that you have to carry over a balance every month or a certain amount of utilization. We always recommend zero utilization, and then we teach credit card strategy. So you can't, not ever use your credit cards, but we teach you how to use them mainly for strategy instead of, to be dependent upon them.
Interesting. And I see we have a couple people watching. If you have any questions, please feel free to drop them into the chat. I'm watching the chat so we can answer those for you live. And then, so another question I have for you, Essie, is what about someone who's just starting out? They don't have any credit. What do you recommend for them or their family members? Maybe they're a teenager. I don't know. Is there anything out there that helps them build credit, that responsibility at a younger age?
Absolutely. In fact, if you go to the next slide with length of credit history, that ties into it. Length of credit history, a lot of the times people think length of credit history means when you started your credit journey. Like if I was 18 when I started, that I'm getting credit from when I was 18. But actually it's per trade line that's on your credit report. So I always recommend for young adults, especially when I'm doing consultations, I always say if there's any young adults or teenagers that are old enough to get a card in the house, let them join in on the conversation. In fact, I did a consultation today, and one of her children was there because he was old enough. And the reason I like to include them is I want them to hear the mistakes we've made so they don't have to repeat them. And it's really good to get a secured card. You want to have an account that shows it's an individual account for that person. Authorized user is great as long as whoever's the main person on that account is not going to use the card. So authorized user doesn't help you so much if somebody's going, spending a lot and getting close to their balance, then it actually hurts you more than helps you. That's why it's really good to have your own credit card, just a secured card that you can control the balance and you're spending on.
What about prepaid cards? Those don't count, right? Nothing.
No, prepaids do not count.
Okay. And so length of credit history, talk to me about that, like 15%, like what's that mean?
Yeah, that's 15% of your credit score. So this is like if you have one account on your credit report, then that's your length of credit history. And you'll see the example I use is the 4-year auto loan. Okay. So if you have just the 4-year auto loan, then you have just a 4-year length of credit history. But this always happens where you go and you open up a new account. And then, in fact, I heard it with this couple today too. They said that's why our credit score dropped, because they had probably established length of credit history. And then when they opened up a new account, they saw it drop. So on your credit report, when you see your recent, I think it says something about your most recent credit line or whatever is too recent, or your most recent trade line, your most recent account is too recent. That's why. It means you may have just sacrificed your length of credit history. This is why it's really important not to continue opening new accounts. Once you start establishing your length of credit history, of course, why a credit card is really important, because you can have a credit card for forever. When you pay your auto off, it's paid off, right? When you pay your student loans off, they're paid off. They don't factor into your score any longer. So length of credit history really needs to be established early on in life. And the best way to do that is with a credit card, but then don't make the mistake of opening a bunch of charge accounts or signature loans, anything to that nature, because it just reduces your length of credit history as you go forward.
Interesting. Okay. And debt ratio, so we kind of touched on this already, I think, right?
Yeah, we did that one. I think it's you would go to inquiries next.
Inquiries, okay.
Inquiries is another huge one, yeah.
So that was another one. So I've had, let's say, for example, last year I went to go buy a truck and I was like, oh, I like this one, I like that one. So I think I was up to like 4 credit inquiries within 30 days. Was that a bad idea? It sounds like, I think.
I get that all the time too. So inquiries, there's a few myths behind this, that if you get your credit score checked the same day for a bunch of autos, it doesn't affect you, but it does. It doesn't
Mhm.
go by date, it goes by how many inquiries. So if you ever take a look at your credit report, one that will show you what your inquiries are, it will tell you how many inquiries you have for every bureau. And
Okay.
the rule of thumb is 6. So if you start getting over 6, then you sacrifice your score up to 10% every time your credit scores run. So you got to be
Mm.
very selective about who runs your credit, especially when someone tells you there's a soft pull.
Yeah.
Um, it's not completely invalid. There is such a thing as a soft inquiry. But if someone is pulling your credit score with your social, your date of birth, and your name, you will see an actual inquiry on your credit report.
And what about is it a myth that so I've heard from lenders too, like if you like they can do a soft hit on your credit. Is that true or false?
Unfortunately, that's not true. Don't get mad at me, lenders, but it's incorrect. And I show some of my lenders, I might where I finance my home. Sometimes I'll pull up that section to my credit report and say, "This was when I was done in underwriting, right? And this
Right.
was supposed to be my soft pull, but it wasn't. It was all 3 bureaus. I mean, they have to check to make sure that you've done nothing else on your credit while you're in the underwriting process. So
Hmm.
I don't know how that could be a soft pull. You have to do an actual inquiry. So,
Hmm.
you just want to be really selective. I mean,
Okay.
your auto, credit card, your student loans, and your mortgage. That's what should be showing up on your credit report as inquiries.
And what about consolidating debt programs? Do those actually work? Because I remember when I had a lot of debt, I thought about doing that, but I don't know if it's valuable or if it dings you or if it's good or bad. Like, can you speak to that?
Communication is, depending on where someone is at financially, it's hard to give advice to that because everybody does have their specific situation. So it's a very specific um, answer to each person I've ever dealt with. If anyone does have that question, I will review their credit report and give them just my suggestions. I can't really give any recommendations. I just give suggestions.
Hmm.
But consolidations can be a little tricky. So there's a lot of good, valuable information directly from our government when it comes to consolidations that consumers need to be aware of when you go the consolidation route. So I always say if you're considering consolidation, especially for old debts, maybe just consider listen to a credit repair team first and let them kind of go through how they can help, potentially help instead of having to do a consolidation.
Hmm.
If it's for open debts that you have that are current, we even have a budgeting program. If you're not a client of ours in the actual credit repair program, it's just a small cost to go through the budgeting. We can always help with that too and just see if maybe that will minimize having to go the debt consolidation route.
Okay, that's good to know. Yeah, I didn't think about that either. Um, and then the next one is, let's see, types of credit in use. So what's this one? Mix of credit. It's good to have different
Yes,
types
having
of
a good mix
loans,
of credit.
right? Like it's good to
It
have
is.
different.
It's not necessary to have all at one time.
Hmm.
I will always say the common denominator for every single one of these that we've talked about, all the different components, is the credit card. Having a credit card is necessary all the way through so that you can build your FICO score. The thing about mix of credit is bureaus want to be able, like I always tell all my clients, what is your credit report? Like if you go and apply for a job, you send them what? A resume first, right? To see if you can get your foot in the door.
Hmm.
So when you do that, all they have to go based off of is that resume. The next step is, do I want to have the face to face interaction? Well, that's the same thing with your credit report. Your credit report is your financial resume. This is all that a creditor has to go off. If you're applying for a Discover card, they're going to look at your credit report and determine can you handle a credit card, right?
Hmm.
Is your payment history top notch? What's your length of credit history like? Having a good mix of credit is more on the bureaus on how they score you. This can help your score by 10% if you have any of these items below, have a good mix of them. In
Hmm.
fact, my son came over the other day and he said, "Look, Mom, I have a 35-point increase." And that was because he just got his first home. So he already had the student loan, had the auto loan, had the credit card, and then across the board 35% increase because he just got his mortgage loan added to his credit report.
Wow, that's cool. Okay, good to know.
Yeah.
So I know I've had a lot of. So if I go back to a couple of these, um, I know that one of them I have going for me is I've got several years of uh, accounts that have been open And I try to keep my balances low on each of the cards. So I think that has helped my score. It went from 580, but now the biggest one, what you said earlier, which I see here now on this chart, is debt ratio. I paid off, I think, almost 80% of my debt, and my score went from like that 580 to 750 within like 60 days.
Yeah.
So,
Once the client's done, that's what we focus on. We focus on, once we've gotten through the whole collection items, delinquent, derogatory, anything that's weighing your score down on the 35%, then
mhm,
we try through the entire program, we try to focus on the debt ratio too, because that's a client's spending behavior, right? They
mhm,
need to know um, what a credit bureau is looking at. So when we're reducing everything we can and taking care of everything we can on the collection side,
mhm,
a client needs to make sure that they're also really engaging and learning in the process to
mhm,
understand. I have clients call me all the time, message me all day long. Essie, I need to get this. Can I apply for it? Should I apply for it or should I leave it alone? Should I not do this? And I love that interaction because I'm like, I'm glad that they know to ask me.
mhm,
Or they pay down a card, they let me know they pay down a card. If they got their secured card, they let me know. But they don't just jump the gun when it comes to inquiries because now they're worried about how that's going to affect their credit score, how it's going to affect their length of credit history. So
interesting.
all of that is really important. I mean, you saw 65% truly is that's not uncommon. 35 for payment history, 30% debt ratio, that's a very common, whether it's a 500 credit score, it's a 700 credit score.
Mhm.
There's always improvement that can be done on a credit report.
And so, how can I get a hold of you if I want to partner up with you and fix my credit? What's the best way to reach out to you?
Absolutely. I would say to follow all of my webinars and anything that I post, because I'll always post results, I'll post webinars. Probably going to amp up the webinars. A lot of people are seeking that information. And I'm great with that. I really like to engage that way and ask questions.
Okay.
The best way to reach me there is go to my San Antonio Credit Help Facebook page.
Hmm.
And then if you want to reach me directly, you can message me or call me, leave me a message. If you can reach me at 210-670-5644. That's my direct office line.
Okay. I'll put that in the comments after the video.
Okay.
And then also, so what other myths that we did not cover? I think I have some notes here I could even go back to, but was there anything that you can think of? I should always.
There's a lot with medical bills. I'm actually going to do that webinar again soon. There's a lot of
Mm,
medical bill webinar. I mean, myths with medical bills. I hear it all the time from people that do not understand how the process works when it comes to medical bills. So I think that's
mm,
one that I'm going to present again,
mm-hmm,
especially because I hear clients telling me that I forgot what I had a client tell me the other day. She's like, well, my insurance was supposed to cover it, so they're going to cover it. I'm not going to worry about it. They said they'll take care of it,
mm-hmm,
that I don't have to do anything. And I said, I know that sounds great, but you would want to trust that your insurance company would. But you do got to be proactive with your medical bills. Because, I mean, medical collections is huge,
yeah,
right? And when you get those medical collections, you don't know when they're going to show up on your credit report. So you don't want to constantly be in credit repair.
mm-hmm,
So you want to make sure that you're proactive. When you leave the hospital, you want to make sure you know what date you left the hospital. When they send the bill, make sure you have the current address so that you can work something out directly with the creditor. You do not want things to go to collection because if they don't get deleted, then they have to get debt settled. So you might as well just try to do that ahead of time if possible. But if you have a lot of collections, you
yeah,
know, don't hesitate to reach out. There's no embarrassment in talking about it whatsoever. It's just something we've all dealt with. I feel like education is kind of brand new when it comes to this,
mm-hmm,
because I'm hearing from a lot of the older generations, even some of the youngers. I have some 20 and 30-year-olds in my credit repair program, and they tell me they didn't get this education.
mm-hmm.
And they always say that thing, well, my mom and dad didn't tell me. And I'm like, well, your mom and dad probably didn't know, right?
Yeah, yeah,
We don't blame our parents. You can research too. So it's like we have to get the information. Same thing with auto loans.
mm,
You don't want to go to a dealership and let them run your credit 20, 30 times. Take ownership of that.
yeah,
Know who you're going to and how to get the best interest rate before you walk in and have your credit ran.
That's great advice. I like that. And it doesn't help sometimes too. I'll print out my FICO score and walk in with it, but some people don't, like some companies, they don't even care. Like they're like, oh, we need to run it anyway. And well, I'm like, why
Yeah.
do I pay for one? Then
You
why
need
do
to
I
know.
pay for, well, then why do I pay for a service that tells me, oh yeah, I can print it out anytime, and it doesn't do, I don't
Right.
know. But
Well,
I,
and that's
it's,
because everybody has their criteria. It's kind of the same thing with a lender. Every lender is going to have different criteria
yeah,
because every lender has different investors.
yeah,
So the criteria is going to be different. I think it's more what I've tried to teach my clients when it comes to auto loans is you want to walk in with an offer letter. You don't want them to
mm,
run your credit. You want to walk in saying, here's my $45,000 offer letter. I'm taking that GMC Yukon off the lot, right? Because you've already established that you've got the loan, you've already tied in your interest rate. You don't have to worry about them
hmm,
trying to find a lender who's going to approve you.
that's valid. Okay, I understood. Um, well, I think I feel like a lot more educated just from this short session that we've
Good.
had. So thank you for sharing all the wonderful information with us, and I think that maybe we can do another one of these soon. I don't know, maybe just one for healthcare because that's something that I didn't
Yeah.
know about. My girlfriend actually, she had to go to the ER a few months ago, and then they sent a big bill in the mail, and it's just like, okay, well, now we got to attack this, we got to pay. So a lot of people just let it go, and you got to make sure that you follow up with that. If not, it'll stay on your record.
Absolutely. I think that'd be a great one to offer, especially because I'm going to give tips on how to deal with the insurance company, how to deal directly with the physicians, the
Hmm.
hospitals, kind of what the time lapse is before it does go to collection. So that'd be a great one to present.
Okay. Cool. Well, with that said, I don't really have anything else. I appreciate you again hopping on and
Yeah,
knocking this out with me. So I feel like this was productive, and hopefully you got something out of it too. People, if you have any questions or if you need any credit repair assistance or credit restoration assistance, definitely let Essie know and leave a comment or ask your question, and we'll get back to you as soon as we can. Okay.
okay.
All right. Well, thank you. We'll talk soon.
Thank you.
All right.
Bye.